Welcome to Bears in Exile. Today is Friday, March 22nd, and this is a quick hit on the metals. Starting off with silver. Last night I was saying that metals were not overly attractive, that I would not be touching them, and that it would require a good move up slash breakout to change my mind, but at that exact moment I was not a fan. Here we are with silver, and silver being one of the, oh boy, I can't remember if it was the most promising or the worst. Alright, I don't remember which one was my favorite last night. In any case, I do think it was silver though. There was room for it to get to the long-term moving average bar and bust out the previous high, and it did not do so. It made a massively weak move, gapping way down, turning into an inverse hammer, and we can see the selling to people's buying. This is not impressive whatsoever. Down 1.5%. We can see the CCI turning down rapidly. That was pointed out in the video that this was a problem, and indeed it was. The stochastics turning down, the RSI turning down, the MACD histogram turning down, and the MACD barely staying up. 14-day RSI moving average is still in ascent. This could be easily a secondary correction with everything moving to the downside, but with the disclaimer of once we break the current floor, it's going to get real ugly real fast. So 14-day RSI moving average or not, break out the floor, and we will have a tumble. And then after that, we will be free to move up with it, probably in a really good fashion. But we have to see if the floor holds. Do I think it's going to hold? There's enough room to do it. I don't know that there's enough momentum to do it. I don't know. Going on to GDX, which we were saying last night had a very nice move, that it accomplished quite a bit with its breaking of the recent highs, making it to the lower price consensus level. But we also said that we were running into the long-term moving average bar, which is resistance, and for this to properly have a strong move, it would have to take out this high right here, and to do so it would have to overcome some resistance. Obviously today it did not, but it did not fall on its face like silver did either. Able to stay inside the big green candle and above its halfway point, and it did kiss the lower price consensus level again. This is very nice in comparisons to silver. Not beautiful, but not bad. Turning down on the CCI, stochastics getting high, trying to turn. The RSI itself getting pretty darn high. Up on the MACD histogram. I don't think there's enough time for it to break out the high. I could be wrong, but doesn't look like it at this moment. And moving on to GLD to finish off the evening. Here we are with gold. And what did we say last night? That gold cheated, that it gapped into the long-term moving average bar, which is a huge no-no. And today, gapping back down, staying outside the long-term moving average bar, getting kicked outside of it, its penetration into it also rejected. Beyond that, we're having all of the secondaries starting to turn. CCI down, stochastics turning over, RSI turning down, MACD histogram turning down, 14-day RSI moving average, and the MACD itself still buoyant. I do expect this gap right here to be filled before anything else happens. Actually, this is a larger gap. It goes all the way down here. And you know what? I should look at the internal structure of volume. This one is too important not to. We know that we've had a really good move up because of the panic in Euroland. Are we in danger? Accumulation distribution staying negative. Unbalanced volume going into a slight danger area. Move down will turn this one into a red. We'll have the two majors red and the three minors green. And at that point, yes, the bias should definitely be to the downside. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.